Hello and welcome everyone to Silver Asset of the Day for the 4th of February 2021, presented by myself, Phil Carr, at the Gold and Silver Club. And what a week it has been here for silver. So if you cast your mind back to Monday's open, we of course saw silver prices skyrocket, break out to $30 per ounce. In fact, we saw a 13% move in the latest week for silver prices, the biggest breakout that we've had since 2008. As many of you know, silver went viral over the course of the weekend on various social media platforms, and with that we benefited massively just by banking profits off the open when we saw over 150 point gap higher. We had 4 positions on silver, banked over 2,000 points on those trades. So as you mentioned, for every one lot that you would be trading over 4 positions like that, 2,000 points, that will make you $200,000 of profit. For every 10 lots that you would be trading, that's $2 million of profit. But this is the point we've mentioned so many times before. You have to keep taking profit off the table. You need to be looking at this as a trader's market. You need to lock in those profits, be nimble. Then when you get the big corrective price action to the downside, profit taking like we've seen at the beginning of the week, you can very simply reload again at much lower prices. So you bank at the top and then you wait for the sell-off and then you reload essentially at lower prices rather than buy and hold, because essentially if you bought and hold, you basically made no money because silver has come back down, retested 26 US dollars per ounce over the last 24 hours. In fact, off the high of $30, it's now dropped down $4. In fact, it very briefly broke below 26 US dollars per ounce earlier on today. So we have seen that mechanism in play again. A lot of profit taking at the beginning of the week, filling the gap that was created off the Sunday open. Overall sentiment got ultra bullish. You get a lot of traders buying at the top. They're FOMOing in. Many traders who are utilizing their outdated technical strategies and they're trying to jump on the back of the overall optimism, I guess, in the market for silver. It doesn't work like that. Typically, you want to buy a key liquidity zone to be early to the trade. That's the most important point. We were early to these moves with silver. As I mentioned, we were getting in between $22 to $24 per ounce. So when we broke out to $30 per ounce, which we actually mentioned to you multiple times in the past, that was also the Goldman Sachs target for silver. We took profits off the table at the beginning of the week off the gap higher off the Sunday open. So with that said, where do we sit now with silver prices? Well, currently silver is trading at 26 US dollars per ounce. Once the dust has settled for silver, no doubt it's going to provide some fantastic opportunities. In fact, Goldman Sachs have now increased their profit target for silver to $33 per ounce. As you know, bull markets, they don't go up in a straight line, they zigzag. And this is where you want to use precision in taking your profits off the table and then opportunities to reload again. Right now, silver prices, they reside at just above $26 per ounce, which is interesting because if you go back on the higher time frames on the monthly chart, $26 per ounce is the level that kept on getting tested. In fact, 3 times over 2011 into 2012 as a very key area of support. Once we actually broke out to all-time highs of $49 per ounce, we came back and retested that 26 level 3 times, and we're sitting bang on that level right now. However, we have non-farm payroll data on Friday, so we could get, again, a fair amount of volatility off that news event. It does typically create quite exaggerated moves in the market. Of course, we've seen the dollar index break out to 2-month highs as well. This, of course, has created further pressure on the metals, but it was to be expected. With the overall hype and euphoria at the beginning of the week for silver, it was just another great example of not getting greedy, regularly locking in those profits. Don't just be a buy and holder, be a trader and make sure you're capitalizing on these markets. These market conditions are fantastic for trading. A classic example is palladium, which broke down on Friday 6% to the downside, 1,500 point sell-off. It's since settled over the last 3 days. We've been able to establish 2 new positions on that market, which in total actually are up currently over 750 points. And this is really it. Right now, with the current market volatility, especially on the commodity markets that we have right now, with oil prices breaking out to 11-month highs, recently platinum broke out to 4-year highs. You've just seen silver break out to 8-year highs. It's just a great market to take advantage of that volatility. And that's what you want to do as a trader, and learn the right approach to the market as well. The research-driven approach. You don't want to be using gimmicky technical indicators, outdated technical analysis. You want to be utilizing an edge in the market where essentially you're using the same approach as the institutions, the professional traders, utilizing data, market intelligence, capital flows, understanding sentiment, the macroeconomics, the drivers for the commodity markets, alongside daily, weekly, monthly cycles, looking into seasonality, marry that up with the intermarket correlations, the ratios, key areas of liquidity, and what the banks, hedge funds, money managers are doing, and that will help you massively to get an edge. So with that, if you would like to join a community of successful traders and learn the research-driven approach to the market, there is an opportunity for you to do so. Join our professional mentorship program. Just click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.